strategy tonight in a little bit here, where I'm going to tie the grid trading strategy into it. And my gift to you guys, my thank you to you guys, because you guys have been responding so well to this. I really, really, truly believe that everybody is better off with this strategy. I truly believe that, and kind of my way of saying thank you and kind of giving back to you, not just those that invest in the strategy, but everybody. I think those that invest in the strategy will end up doing better, but for everybody, I'm going to share this workspace with you with all the indicators and all the strategy together, but I'm only going to keep it in my expert workspaces until I go to bed tonight. So when I share this workspace with you, with all the indicators and all that, I will show you a little back-end route on how you can save it, to your computer so you have it forever. Does that sound cool? Type in a wire yes if that sounds cool. Some of you might not know anything I'm talking about, but you will in a little bit. Okay, all right. Okay, perfect. All right, let's talk about the dollar yen. Okay, so dollar yen, this is kind of surprising to me. I am looking to buy. In fact, I have a position in right now. I've already started my long position. Now, I haven't talked about being long the dollar yen for a very, very, very long time. And fundamentally speaking, I'm still concerned with where the dollar yen is. But I've told you this before. You've probably heard me say this before. I can't trade off of what I feel may be happening. I've got to trade off of what I know is actually happening. And what I know is actually happening is what is on the charts. That's the reason why I trade technicals, is because technicals aren't subjective. What is subjective is interpretation of fundamental announcements. What is subjective is interpretation of policies, different financial institution policies, different regulations. That is somewhat subjective to the markets. What I know is not is how price has responded historically. That's the reason why I'm a technical trader, is because technicals and price action is truth. And because of that, that's why I trade it. And because I used to trade, or I used to try to trade off of what I feel and you know, how I interpret the economy and all that kind of stuff. And I'll tell you, I can lose money faster than anybody I know if I try to trade off of my feelings and my perceptions of the world. Maybe some of you can agree with that. Maybe some of you would, you know, say, no, I got you beat on that one, Tyson. I can lose more money. No, let's not have that contest, right? That's not a good contest to have. But my point is I got to trade off of what is actually happening in the charts. And so what we're looking at here in the three core questions, I've been talking about this. I feel like a broken record this week, but it is so important for you guys to understand this. There are three core questions we've got to ask ourselves, regardless of what type of trader you are. It doesn't matter if you're a target trader, a leveling student, a basket trader, a divergent trader. It doesn't matter. The three core questions that you need to ask yourself before you place any trade is, number one, what direction is the market most likely to move in next? Even if you are not necessarily a 100%, dang it, not 100% a trend trader, even if you trade maybe oscillators, maybe you trade a different style, you still have to be able to answer. You have to have some type of directional bias, right? Because we're not trading options here. We can't do a non-directional trade. We've got to make a decision on some type of direction. We either got to buy or sell. So again, what direction is the market most likely to move in next? That's the first question we need to ask ourselves. And one of the core ways that I answer that question is using fibs. It's one of the main ways. It's not the only way. It's one of my main ways that I define direction. If you're wondering some other ways, maybe you guys can, actually I'm going to ask you, what are some other ways we can define direction? There's about 50 of them. There's about 50 different ways you can define, very logically define direction. But, you know, just give me a couple that you know. Jennifer, Gary, they both typed in literally at the same time. Look at that. Holy smokes. Wow. Jennifer, Gary, Dennis, Robert, Elizabeth, all literally within 10 seconds of each other, all typed in. You guys sitting in the same room, you all typed in trend lines at the same exact time. Wow. Great traders think alike. Yes, trend lines, wave analysis, moving averages, Fibonacci's, 7 to 11 rules, right? All of that stuff, all of that good stuff. RSIs, right? Buy zones, sell zones, that's all good stuff. Yeah, using higher time frames to kind of look at candlestick analysis on higher time frames and doing a comparison of that to the lower time frames, and then bringing that over to the lower time frames. Crowning formation for sure, absolutely. So the way that I'm going to look at it, I'm going to use two different styles today. Two different styles. I'm going to show you two different styles. And both of these are amazing. Another style that I'm a very, very big fan of is targets. I'm a huge fan of target trading. Target traders have it really easy because we define direction as a target trader whenever we have a missed or on-hit target. That's the direction we're going to most likely move in. We've got a very high probability of price moving in that direction to that level. And that leads me to my second question, which is once I know the direction we're moving in, I then need to know what level is the market most likely to move to. And again, that's the reason why, if you're wondering, well, Tyson, why do you always like talk really, really highly about targets? Well, one, because target traders are super successful. They're doing amazing. Two, because it answers the first two questions probably better than almost any other strategy that we have. The other strategies we have are awesome, but target traders with just a glance of the chart know, okay, the market's moving here, or the market's moving in this direction, it's moving to that level. For all you target traders out there, type a Y or yes in the question section if you agree. It's awesome. It's very easy. And that's one of the really attractive things about it. And we know we have a high probability of the market moving in that direction to that level. All right, then the third question we need to ask ourselves is, at what level am I wrong? To say it another way, at what level do I need to place my stop? If the market doesn't move in the direction, because every once in a while we're wrong, and if the market doesn't move in the direction that we think it's going to move in, and it doesn't move to the level we think it's going to move to, then at what level are we wrong? So let me just ask real fast, do these three questions right here, no matter what strategy you're trading, would you agree that these three questions are probably the most important three questions you can ask before you place a trade? There might be some others that you could add in there that are really, really important, but these three right here, if I boil it down to like the easiest, the core of what we're trying to do, it's what directions is the market moving in, where's it moving to, and at what point am I going to be wrong? And from those three questions, if I can answer those three questions, I should be able to build everything else around that. So what I want you to do, yeah, these are a good start. There's obviously other things, then from that place, after we answer that, we then have to answer, well, how much am I willing to risk? Do I have proper risk to reward in place? Are there ways that I can increase my probability or increase my odds? All of that stuff. But before we even get to that point, we've got to answer all these things. Okay. So what I want you to do is I want you to remember these three questions, because these are the three questions I'm going to constantly go back to in this webinar. I'm going to be constantly asking the question, which direction are we most likely to move in? And it's got to be clear. And then what level are we most likely to move to, and where am I going to be wrong? So in the dollar yen, let's start with question number one. If I'm looking at this right here, which direction am I most likely to move in? And I'd like everybody in here to answer. Up, right? And it's up. And the beautiful thing about this is it's not up because we just feel like it needs to go up, and it's not up because, oh, well, the Bank of Japan is going to do everything they can to weaken their currency. Well, they've literally been doing that for decades, and it hasn't worked. No, it's up because the technicals, and maybe even now the fundamentals are lining up too. Okay, I get it. But the reality is it's up because the technicals are lining up. And there's going to be more buyers than sellers. That's why. And so we've got this A, B, C, and we should be looking for our D extension of this A, B, C, D format up to 129.41. We also have, and I'm sure you've heard the chief talk about this, some of the greatest trades you can take is trades within an ABCD sequence, but trade sub ABCD sequences within a larger ABCD sequence. Have you ever heard the chief say that? Trade the subs within a larger swing. Yeah. So that's exactly what we have right here. We have a sub ABC looking for a D. And if we look here, the great thing about this is this D extension of this A, B, C, this D extension is pretty close. In fact, it's within about 100 pips, which on a monthly chart, that's pretty close. It's about within about 100 pips of the D extension on this A, B, C, D. So that's called a level of confluence or a cluster level of Fibonacci's. It's a cluster level. And so that's really good stuff. And so that right there makes me very confident in being able to answer question number 1 and number 2 very clearly. We're moving up, and the level I believe, and I'm very confident we're moving to, is to 129.41. That's where I believe we're heading to. Now, I'm going to now take this information, and I'm going to go into the smaller time frame, and I'm going to answer question number 3. Now, I would typically answer on this one chart, but I'm going to answer this on a daily chart. So I'm going to transfer this over here. I'm going to transfer this 129 level over to the daily up here. And the way I'm going to answer this daily, or the question number 3, is I'm going to bring in the daily fib sequence. And right here is the daily A, B. How many of you heard me talking nonstop for the last 3.5 months about 109.03, 109.03, 109.03? Hey, we're going to 109.03. Hey guys, hey, the dollar yen's going to 109.03. Yeah, I mean, I've been talking about it every single day for basically since the end of December, mid to the end of December. No, Abe never gave me a cigar, but we're even because I owed him a cigar, and now he owed me a cigar. So so we're even. I love Abe. Abe's great. But anyway, so the beautiful thing about this is actually really cool. This is really, really cool. So if we look at this AB sequence, then watch this. We go, if price makes a turn right here, which, by the way, just real fast, what do we have in a shorter time frame? You'd be able to see it a little better, but what do we have right there? What is that? That's a crown. That's a confirmed crown starting to break out. This is awesome. This is awesome. Yeah. Okay. And okay, so we've got that crown. So if we get the turn, if this is, let's say this is our C, and we don't know for sure this is going to be the C. We don't know if that's the C for sure until we hit our D extension or take out an A, or well, really until we take out until we hit a D extension. But I'm going to assume, because we're starting to get a turn and we're starting to get what looks like a reversal pattern, I'm going to assume that this is going to be the C, and that means we're going to rally up to this D extension right there. Type in a wire yes if you agree that that could be the scenario, and the fact that we have our confirmed 382, and we're getting a turn at that level, that we could very well see a rally up to this D extension. Well, let me show you why I'm really confident that that's happening. Remember what this 129.41 level is. Remember this? This is a monthly D extension. Watch this. I love when the market speaks to us. Every once in a while, it can just speak in volumes and paint beautiful pictures. So if this goes up and rallies up and hits this D extension up here, check out where the new daily D extension will be in comparison to the monthly D extension. Anybody else pretty impressed with that? Anybody else pretty like, oh, whoa. This is the monthly 127D extension. And if price rallies up, hits this D extension. And so what this is forecasting is this. This is forecasting price going A, B, we have our C, it's going to go D, then we're going to put in our new C, and then it's going to go D. And that's the price action it's going to go through. You guys starting to see it? And it may not look exactly like this, but it's probably going to look fairly similar to this. This is great. This is an absolute great looking chart. So with that said, none of these waves, this first wave matters. This wave down, there's ways that we can manage the trade a little better here, maybe book some profits here, get back in down here, and then write it up here. But I'm going to show you the way that I'm going to set up a position trade. This is going to be, this is the way that I have it set up in my long-term portfolio. And I know a lot of you do not trade this style, but that's fine. I'm going to show you how I'm going to use the grid to trade this. But before I do, if we go back, we already answered question number 1, direction, up. Question number 2, where to? We're going to 29.41. Now question 3, where am I wrong? Well, I'm going to use the daily A. If price breaks below this A, then I'm wrong, right? I'm wrong. Jerry asked, can you define a position trade? A position trade for me is a trade that's probably going to last anywhere from probably longer than 3 months. It can last anywhere from 3 to 15 months or 24. It lasts a while. It's a longer term trade. So it's an emotionally taxing trade if you're going to look at it all the time. It's one of those trades that you set up and you don't and you like kind of force yourself not to look at. Right? So you don't over leverage it. You use, a fraction of the size you normally would in your day trading or your swing trading, and you just let the thing just kind of play out. And it's kind of more of investments. It's an investment trade. Kind of look at a position trade as somebody that would buy a stock that they're going to hold for, at least a few months to maybe in a year or two. Okay, and this is kind of a position trade for me. And so this trade here, from current levels. I've answered all my questions now. I believe we're heading up to 129.41. My area where if we break below 101.18, I'm wrong. And so if I were to just place this trade and go to sleep, I believe we have a very high probability of getting up there, and I'd be risking about 830 pips, which is a lot of pips. I get it, but I'm risking 830 to make 2,000. So is risk to reward in my favor in this trade? Now you might be like, dude, I would never take a trade that's risking 800 pips. And that's fine. Remember, it's a position trade for me. So, you gotta keep it in context, but risk to reward in this trade makes sense. It makes perfect sense. Now I'm going to show you how I plan on turning this trade from 2,000 pips and how I plan on making maybe up to 6,000, 8,000, maybe even 10,000 pips in this trade. Let me show you how. I'm going to use Joshua Martinez's grid trading formula. So I know the direction. So I've answered these 3 questions: the direction, the level, and where I'm going to be wrong. Now I'm going to go, and I'm going to stay on this daily chart. And I'm going to stay on this daily chart, and I'm going to measure from high to low. I've got 500 charts, or 500 bars. Here's the rules. There's 5 rules of this, and I'm going to just go through these kind of quick, but here's the 5 rules. Actually, I'm going to cut them down to 4. On a 500 bar chart, and on this one I'm using a daily chart because I'm position trading, measure the distance between a high and low. Number 2, multiply that number by 3. Number 3, divide that number by 2. Number 4, divide that number by 10. So how does this look? What does this all mean? It means this. 500 bar chart, what that means is I've got 500 bars. So I'm looking at 500 bars. And this formula works on any time frame. I'm going to show you this formula using a 1 hour chart also, okay? All right, so here's what I'm going to do. I'm going to measure the distance between the high and the low using a 500 bar chart. So we've got 2,585, about 2,590 pips. So here's how I do this. You take 2,590. I'll type all this out. So I've got 2,590. It's a really large range because it's a daily chart. So 2,590 times 3 equals 7,700. All right. I'm going to divide that by 3. And I'm going to divide that by 10. My grid, so let me do that one more time. 7,700 divided by 3 is 2,566. Oh, I'm sorry, divided by 2. Sorry about that. Divided by 2, yes. So it's 2,590 times 3 divided by 2 divided by 10. So 3,885 divided by 10 is 388.5. So my grid needs to be your grid size. The grid size is equal to number 4, the fourth rule. In this case, 389 pips, pip grid. So what this means is this. I've done the formula now, and I have a choice. I could just buy right here, put my stop down here, and put my target up there, right? I could do all that, and I could be done, and I could, you know, have about 2,000 pips worth of reward, and so 38.50. Somebody's telling me it's 38.50, which doesn't make a huge difference, but there we go. Okay. So I could just take this trade, put my stop down here, put my target up there. Or here's what I could do. I could trade it as a grid, and I could try to turn this 2,000 pip target into maybe even 10,000 pips. How in the world can I do that? Watch this. So I just used Josh's formula. Now I'm going to put on the matrix, and this is something I'm going to be able to get in your guys' hands, and you're going to have this. You're going to be able to have this risk-free for the first time. We're going to be able to get this in your hands risk-free because I'm going to make some bold statements tonight, and I think everybody's going to want it. Okay, so here's what I'm going to do. I'm going to say 10 grids up and 10 grids down, okay? My distance of pips needs to be 385 pips because that's the calculation of the grids. Now remember, I'm using a daily chart. I don't usually use a daily chart with this, and I wouldn't recommend it other than a position trade. This is a position trade that I'm literally planning on being in for anywhere from 3 months to probably maybe even up to 2 years, right? I mean, it's a long-term trade. I'm going to trade both sides. I'm going to buy the market. I'm going to close. This is where it gets beautiful. I'm going to explain this. If I just bought the market right now and I put my stop right here and put my target up here, best case scenario is I make 2,000 pips, right? Type in a wire, yes, if you understand best case scenario, give or take, about 2,000 pips, right? That's best case scenario. So if I set up the grid, why not close the grid and reestablish once I get 2,000 pips? So once I get 2,000 pips, let's book in the profits, bank our money, and then reestablish until we get up there. So that's what I'm going to do. So watch this. Thanks, Benjamin. Okay, my stop is going to be at 101.18, and my target's going to be at 129.41. Okay, so let's double check. Thank you to Benjamin. I need you guys to remind me to double check, right? All right, so 10 grids above and below, and I'm gonna show you how this looks. 385 pips wide because we did the calculations using the daily. We're going to trade both sides by. I'm going to lock in my profits at. It's a mistake on the second line. 77.70. Let me just make sure. Let me do that again. 2,590 times 3, divided by 2, divided by 10. Yep, so it is 389. So I'm going to turn this back to 389. Okay, so now it's right. Now it's right. Christopher, that's a great question, Chris. No, so the dollar yen has a positive carry on the long side. So it's a great, the dollar yen is a great long-term position trade to hold in your account, and it won't have a negative effect, negative roll every single day on your account. It'll actually have a positive roll effect on your account. So even if it doesn't do anything, you're going to make a couple pips every day, which is nice. That's a good thing. You'll have a positive interest roll. But anyway, so let's do this. Watch this. Bam, done. Okay, so now all of my orders are in there. I'm done. My job is done. If I were a hedge fund manager, this would be a trade I would take. This is one of the main trades I would have my guys take. Now, let's just play this out for a second. Watch this. Okay. What if price, or I guess I'll ask it in this way. Is it feasible for price to do this? Over the course of the next 2-3 years. Is that feasible? Could that happen? Absolutely, it could happen. Yeah, I don't know exactly if it's going to happen, but what I do know is I'm confident we're going up to 129.41 before we go down to 101.18. So if price goes on some type of form that looks like that, right? Well, then how did the grid trader do? The normal trader made 2,000 pips, right? Made 2,000 pips. The grid trader, on the other hand, what did they make? Well, they went long right here. And every one of these lines, these grids, they bought more. They bought again here. And then it came down, they bought again here. It came up, we were already long from here, so we didn't buy again. We were already long on this one, so we didn't buy again. We buy again here. But now the question is, well, once we get to this point, do we have 2,000 pips of profit? Well, this trade from down here, somebody do this math for me if you could, please. You're up 1,160 pips on this trade. You're up 770 pips on this trade. And you're up 300 pips on this trade. What is that? That's 2230. So therefore, even before this, so right about in this level, right about here, type in a wire yes in the question section if you understand that right there you would have made 2,000 pips. You would have booked your first 2,000 pip profit, the grid trader. The original trader is still in the trade, and the original trader is up 600 pips. So the original trader is up 600 pips. Say, oh, okay, they're doing well. But the grid trader just booked its first 2,000 pip gain right there, and now they reestablish the grid, and what do? Well, when it goes up here, it gets long again. Comes down here, it gets long again. Gets long again. So now what is this person up? So let's just see. From this point to this point, be 1,000 pips there. So from this long here to here would be about 1,000 pips. From here to here would be about 550 pips, and from here to here, ooh, didn't quite get 2,000 pips there. Didn't quite. But by the time it rallied up to about here, got its second 2,000 pip gain, right about here. Right about in there. Its second 2,000 pip gain. So now the grid trader has made 2,000 pips once and 2,000 pips twice. Whereas the normal trader is still happy, right? The normal trader is happy, and the normal trader is up 1,400 pips. All right, now what does the grid trader do? Well, the grid trader sits on his hands, his or her hands, goes long again right here, and then gets out of the trade at the same time the other trader would. So this trade here would have made about an extra 430 pips, and then there'd be a little buy. I won't cut that, plus 430. So before I add these up, I just want to ask, does everybody understand that the grid trader, if this is the path, and I don't know what the path's going to look like, but if this is a path, and it could look like this, the grid trader would have booked 2,000 here, reestablished, booked 2,000 here, reestablished, and booked 430 here. Type in a wire yes if that makes some sense. Whereas the normal trader would have made 2,000 pips. Okay, so the grid trader made 4,430 pips At the same time, the normal trader only made 2,000 pips. Both traded the same exact trade as far as the targets and the stops, same exact reasons they got in, because the market was going up to a certain level. Okay, are you guys starting to understand this? Another thing that's really important, really important is the fact that I want to show you something here, because this is important. Another thing that's really important is what if price goes like this? What if price falls down and then rallies up and then falls and rallies, falls, rallies, falls, rallies, falls, rallies, and then falls and stops you out? What if it does that? Could it do that? Could price do this? Yep. Now, the normal trader, how much did the normal trader make or lose if you took this trade? The normal trader took a loss of 850 pips, right? 850 pips. Whereas the original trader would have potentially been able to make, and if you have a 2,000 pip, this is such a wide, this one's probably not a good example, but if the ranges were a little bigger, and to prove my point, I'm going to make the ranges just a little bigger. If the ranges are a little bigger, like this, let's say, and it goes in a range and it consolidates, right? Well, what did the grid trader do? How did the grid trader do? Right? How did the grid trader do? Well, the grid trader got long here and long here, and as it rallied up here was up 850 pips. From this level was up. So right there would have booked its first 2,000 pip gain right here. Then would have started getting long again. Here and here. Here and here. Could have been in break even, but essentially probably would have been, that would have been the first position there. But overall, actually this probably isn't a good example. Probably would have ended up losing about the same amount, about probably 850 pips after that 2,000 pip gain as the normal trader. I have a better example that I'll show you in the Euro CAD in a second. So this is a position trade that's going to take a very, very long time. A long time. But what I've just shown you, I'm going to get rid of all this because I'm going to share this workspace with you guys. What I've just shown you is this. I've just shown you a way that I am going to trade this. I've already got a position started to establish in my position trading account. I'm already starting to get into this. And I am actually going to grid trade this, so I have started a position that's a little bit smaller than I would normally go into, because I'm going to grid trade this all the way up, and if it comes down, I'm going to add. If it goes up, I'm going to add, and it's going to be great. So position traders, or I'm sorry, grid traders, your expectation should be on every single trade that you take. If you are a grid trader from this point forward, your expectation should be to whatever your pip amount is if you hit your target. So in this example, it's 2,000 pips. You should be able to times that by 2 or maybe 3 to 4 times what the average trader would get if you grid trade it. Okay. You guys ready for some more examples? You guys ready for a strategy that I'm going to let you guys have tonight that I think is a perfect strategy for grid trading? I think target trading is an absolute perfect strategy. I think leveling is a perfect strategy. Mastermind is a perfect strategy. And the strategy I'm going to show you, I think, is a great strategy too. If you are already a leveling student or target trader or mastermind trader, then you do not, please do not think you need to add this to your arsenal. You don't. This is just an idea. I've traded this style. Actually traded this style for a very long time. When I first became successful as a trader, this is one of the core strategies that I used. And I built a lot of stuff around this concept. Okay, so, and I'm going to share this with you. All right, okay. Did any of you watch the video that I posted on Facebook about moving averages in Keltner channels? If you didn't, that's okay. I'll explain it right now. All right, so really what we're trying to do as traders, we've already kind of went through this. What we're trying to do is figure out which direction, where to, and when are we wrong. But really what we've got to figure out is I'm a trend trader. And so what I want to do as a trend trader is I want to make sure that I'm trading in the direction of the trend of it, and it's got to be based on logic. It's got to be based on, you know, things that are absolute. It can't be based on something that's subjective. And then it's also, I've got to have a way to define whether that trend is good, right? It's got to be a good trend. It's got to be a high quality trend. So one of the best things that I've found, and one of the best ways that I've found to define a trend and define a high quality trend, is to combine a simple moving average, because it's just an average of price over a certain period of time. So this is a 200 period daily moving average, and price has a very, very high level of respect for the 200 period moving average. Type in a Y or yes in the question section if you can clearly see price respecting this line many, many, many times, and even on the downside. And it always does. Not always, but it has a very high level of respect for the 200 period. It is a great way to define very logically, very clearly, both you and I and all the other traders in the world, if we're looking at a 200 period moving average, we should be able to come up with the same conclusion on whether we're in an uptrend or a downtrend. So the way that I define an uptrend or a downtrend, if I'm using this strategy, and it's one of the best ways that I know of, and it's one of the easiest ways, is if price is below the 200 period moving average, we're in a downtrend. We need to look to sell. If price is above the 200 period moving average, we're in an uptrend. We need to look to buy. Type in a Y or yes if that makes sense. Super easy. I mean, like, okay, that's like super easy. Doesn't need to be any more complicated than that. It's really, really easy. Okay, so that's step number one. Step number two is I got to make sure that we're in a high quality trend, because not all trends are created equal. I've got to make sure it's a high quality trend. And the way that I define a high quality trend is one of the best ways is using what's called a Keltner channel. Now, don't get confused on what a Keltner channel is, but I will show you real fast. It'll be a crash course in this. Okay, that's not what I wanted to do. A Keltner channel is essentially, it's a calculation of ATR bands, average true range bands, above and below a moving average. All right, and so let me see if I can explain this and show you what I mean. Okay, so this purple line, type in a Y or yes if you see this purple line. You see that purple line right there? That is a 21 period daily moving average. That moving average is smack dab in the middle of these two bands. And the distance away from the moving average, this 21 period, is 1.5 average daily trading ranges, average true range, above 1.5 below. And it's got a setting of 21 over the last 21 days. So it's a 21-day ATR below, 21-day ATR above the 21 period moving average. Type in a Y or yes if that makes a little bit of sense. That's really, you don't even need to know all that, but it's just, and also, this is one of my biggest pet peeves, by the way. Like, I'm a very, very big stickler on this. I believe when somebody is showing you an indicator, this is just me, okay? This is just me based on my history. Every indicator has to serve a purpose, and it has to have some logic based on the time frame we're looking at. I can't use a 4 period moving average on a daily chart just because I think a 4 period moving average on a daily is good. It's got to make sense. It's got to be logical to the time frame. So the question I get a lot of times, and the question I would be asking if I were you, is, well, why a 21 period moving average then, Tyson? A 200 period, because this is 200 period is in the industry, in the trading world in general, this is one of the most standard moving averages out there. There's a whole lot of hedge funds and traders that look at the 200 period moving average. It's just one of those staples that a lot of big money players look at. So that's the reason why it respects that level. Now, why 21 period? Well, number one, because 21 period represents almost a month. It's not quite a month. It's not quite a month, but it's almost a month. And it's the closest moving average that represents almost a month of price action that is also a Fibonacci number. Type in a wire yes if that makes sense. So it's a Fibonacci number and it represents almost a month of price action. Therefore, that's the reason why it's a 21 period. That's the reason why I use a 21 period. There's logic behind it. It's not just some random, I can't stand random, I can't stand random indicators. And I'm a big believer in settings on indicators should change based on the time frame you're looking at. I've been doing this long enough to say that very clearly. Okay. Anyway, enough of that. So the trend is defined by the 200 period daily moving average. So right now we're below the 200 period, so therefore we're in a downtrend. But we only want to trade when we're in a high quality trading day. So right here, when both Keltner channel bands, when both bands are below and price is below, that is my indication of a high quality trend. Type in a wire yes if that makes sense. Okay. So right here, we started a high quality trend, and this trend will maintain being a high quality trend until the Keltner channels, until, the higher end Keltner channel goes above the moving average. But as long as it stays, both bands and price stay below the moving average, this is a high quality downtrend. Now, how do I enter? Well, if I'm looking to sell because we're in a downtrend, what I want to do is, if I'm looking to sell, I should sell at a high price, right? So what I'm looking for in this trade is I'm looking to sell at a high price in a high quality downtrend. So what is my indication that I'm at a high price? Well, my indication I'm at a high price is when both channels are below the moving average, price is below the moving average, but price is closing above the extreme, above the high Keltner channel. Type in a wire yes in the question section if you understand that that is a perfect indication of a high price in a high quality downtrend. It is absolutely perfect. It is one of the greatest indications of a high price and a high quality downtrend that you will ever find. It's like almost the definition of a high price and a high quality downtrend. Does everybody get it? So right here would have been a perfect example of a high price and a high quality downtrend. When do I enter? When price closes back into the band. Where is price most likely to go after it does that? To the extreme other band, to the other side of the band. So, does this trade short here, down to here make sense? Does this trade short here, down to here make sense? Those are two very, very, very great trades. These two trades, this trade right here. This trade right here. You might be wondering, well, Tyson, what about this trade here? Right? You're still in this trade and you're still in this trade. Yeah, because this is also a strategy where we can use the grid and dollar cost average in. That's why I love this, because guess what? We're still in a high quality downtrend. We're still in a very high quality downtrend. And price is now closing above the Keltner channel. So when and if we close within this Keltner channel in the next day or two, guess what time it is? It's time to short. And where are we heading to? Well, the target needs to be to the other side of the Keltner channel, which is 139.42. So I'm just going to pause for a second. Does everybody understand why I am currently looking to sell the Euro Aussie down to 139.42? Because one, we're below the 200 period moving average. Two, both Keltner channel bands are below the 200 period moving average. Three, price is trading above the high band, therefore it's at a high price in a high quality downtrend. Make sense? All right, so here's the deal. All we got to do is wait for a close inside of the Keltner channel, and we know with a very high degree of certainty that we're moving down to here because we're in a high quality downtrend. Now, where do I place my stop? There's a couple places you can place your stop. One of the best places is if I'm shorting, place it at the first resistance level, the closest resistance level above the 200 period moving average. So I go here, click on resistance. This right here is the closest resistance level above the 200 period moving average. Again, type in a Y or yes in the question section if that makes sense. Now you might be thinking, well, geez, that's a really far away. But let me tell you, this is about a 75 to 80% probability trade. So this is one that is equivalent to like your leveling trades, mastermind trades, target trades. This is one of those trades that is perfect for grid trading. And that's really what we're talking about. So remember the three questions we were asking ourselves, right? Let's go through those. Do we have a clear logical direction we need to trade in? Yes or no? Based on logic, not based on perception or opinion. 100%, yes, we do. We're below the 200 period. That is truth. And we're in a high quality downtrending market. That is truth. Do we have a high quality market because price is above the Keltner channel? Yes. Okay, do we have a level that we believe we're going to go to? Yes, the other side of the Keltner channel because price goes from one extreme to another. Do we have a clear level where we're going to be wrong? If price doesn't go down here, do we have a clear level where we're going to be wrong? Yes or no? Yes. The closest resistance level above the 200 period moving average. I need to pause for a second, type in a Y or yes if this makes some sense. This is good stuff, guys. I'm going to be sharing this with you because this is going to be my gift to you guys because I'm so happy that a lot of you have taken my advice and upgraded into the grid trading strategy because this is going to be perfect. This is one of these perfect strategies for grid trading. Now what do? Now watch this. Now that I have all of this, I have my entire plan. I need to sell down to 39.42 and a stop. My stop is at 44.69. Now, technically, I wouldn't sell. We shouldn't sell until we get a close, a daily close into the Keltner channel, technically. Now, let me show you this. I am now going to go to a 1 hour chart, and I'm going to use Josh's grid trading formula on a 1 hour. If we remember what the formula was, the formula is taking the high and low. Let me do this. I'm going to transfer this over there, and I'm going to transfer this over there. Okay. So now I have my stop and I have my target. Now I'm going to use the formula, right? The formula is I've got to have 500 bars. Got 500 bars. I'm going to take the low to high. That's 390 pips. So I'm going to take 390 times 3 divided by 2 divided by 10. My grid needs to be 59 pips wide. So now I'm going to go here and I'm going to set up my grid. And I'm going to go 10. It's going to be 59 pips wide. I'm going to trade on both sides. I'm going to sell. My stop loss is going to be 1.4470. I'm going to go right above that pivot. And my target is going to be 1.3942. Now, this is not ready yet, but the next update, and this is going to be very, very soon, the next update of the grid or the matrix that you guys are going to get will have this. Let me show you this. Remember, technically we have to wait for this trade. If you're following the Keltner channel and the quality rules, technically we have to wait for a close inside the Keltner channel, right? Type a Y or yes in the question section if you remember that's one of the rules that I use. So what do? Well, geez, Tyson, we don't have a close yet. So I'm so excited about this trade. What do I do? Well, don't break the rules. What you would do is you would set the grid up like this. You would say, okay, and this isn't done yet, but it's going to be done here soon. You go 10 grid, 59, both sides, sell, stop at 144.20. 70, whoops, 70, target at 139.42. And then once the updates are done, you see this activate. We're going to be able to set an activation, and I'll be able to say daily close inside the 21 period Keltner channel. I'll be able to set that up. And then right when I hit OK, it will not establish the grid until the daily bar closes inside the Keltner channel. Now I need to ask everybody, because I think that is worth a wow. So if you think that is worth a wow, type in a WOW. I think that is worth an absolute wow. This is crazy, guys. This makes my job like so easy. But just for today, for now, I'm going to show you, we're going to act as if we closed inside the Keltner channel, okay? So I just want you to know this is actually not a trade yet, okay? But we're going to act as if, because I want you to see it. We're going to act as if we have closed inside the Keltner channel. And let's say that just happened. Bam, that's what would take place. How cool is that? On a scale of 1 to 10, you tell me how cool that. I think this is a 10. This is like a jackpot. I mean, jackpot. Yeah, I love it. 59. Yep. Mario, Marie, let me explain the 59 again. So we found the trade using the Keltner channel moving average strategy that I'm going to share with you guys today. I'm going to share with you guys. Now, if you're already a target trader, leveling student, mastermind, use those strategies, right? Those are phenomenal grid trading strategies. This is another strategy that you can maybe add to your arsenal. I don't want to overwhelm you guys with stuff. I'm just showing you another example of a way to use it. Now, so we know where we're heading to, we know our stop, and we know all the information. So at that point, then I went to a 1 hour chart, 500 bars of a 1 hour chart, and I did the formula. The formula is you take the high to low, total pips, which was 390. So I took 390 pips times 3, divided by 2, divided by 10, and it gets me my grid, how far my grid needs to be apart. And Josh is going to teach this formula. There's also a formula that you can use where you don't even need to know the direction. Josh has actually created a formula where you don't even need to know direction. You don't even need to know where it's going. You literally, there's just a no-brainer strategy where you just set up the grid pretty much on any chart out there and just let it rip. And it has a 90% success rate. But I'm not going to trade like that, guys. I'm not personally going to trade like that. I trade like this. I trade with a direction, with a level, and a stop. That's the way I trade. Okay, you guys ready to see a couple more? And then I'm going to let. What if I told you this? How does this sound? Tell me if this sounds fair. What if I told you for tonight, I talked the executives and the management team in to letting every person who decides to go into the grid trading strategy that's not already in it. What if I told you I talked them into letting you do it with a satisfaction guarantee for 30 days? After you receive this, after you take the class, you have 30 days to test drive this thing. And if you don't love it, get all your money back. Does that sound fair or what? I think that sounds amazing. I don't think we can get any fairer than that. I don't think we can get, I mean, that's about as good as it gets. Yeah, meaning you can take the class, you got 30 days after the class is delivered, 30 days after the class, you test drive it, you love it, maybe you don't like it, who knows. If you love it as much as I think you're going to love it, because I think every trade that you take should have the grid, every trade, then guess what? Then you're not going to ask for your money back. If you don't love it, you get your money back. It's that simple. Okay, so let's go into another trade. I'm going to show you another one. I'm going to move kind of quick on this one. All right, so let me get rid of this. Let me hide that for a minute. Aussie, New Zealand. Okay, this one's a little unique, but yeah, I'll explain why it's a little unique in a second. Okay, does anybody see something interesting? This will start to jump off the page for you. Price is above the 200 period. Both Keltner channels are above the 200 period. Price has recently is going to, and I thought already had, but should be closing within the Keltner channel very, very soon. So this is a trade that we should be very confident in knowing where price is going to be going. Price is going to be going up to the other side of the Keltner channel, which is 109.12. That's where price is heading to. It's heading up. Now, this one's unique because remember I said Remember I said you place your stop at a level of support or resistance. You place your stop at support, the first level of support below the moving average. Remember I said that? The problem with this is the first level of support below the moving average is all the way down here. I'm not willing to place my stop all the way down here. So what I'm going to do on this one, because the moving average is, now this is a little bit more advanced, but I think you'll get it. You see how the moving average is trending ever so slightly trending higher? You see that? Okay, so because it's trending higher, I believe over the next couple weeks, over the next little while, the moving average is going to soon be higher than this pivot point or this level of resistance. Type in a wire yes if that makes sense. So I am going to put my stop level here instead of down here. Make sense? And the reason I'm doing that is because I believe soon the moving average will start to creep over this and it will meet the rules anyway. Everybody following? That's a little bit more advanced, but you know, hopefully that makes a little bit of sense. Sometimes we can't be black and white, because if I was black and white on this, and I know sometimes some of you like to have it black and white, well, my stop would be all the way down here, and that's just, then I wouldn't be able to take the trade. I wouldn't have enough reward in comparison to risk, and I'd be like, well, I guess skip it then. But I want to take this trade because it's a high quality setup, so I'm going to place the stop down here. So we've answered the three main questions. Which direction? Where's it going to? And where's it not going to go to, or where are we wrong? So now from this point, let's do our grid trading formula. So now what I'm going to do is I'm going to transfer my stop level over to the lower time frame. I'm going to transfer my target level over to the lower time frame. And then I'm going to set up my grid. I'm going to go from high to low, which is 325 pips. So now I use the formula. 325 times 3 divided by 2 divided by 10. My grid needs to be 49 pips wide. So now here's what I do. I go matrix. Oops, give me a second. I go matrix. I'm going to go 10 up, 10 down. 49 pips wide. I'm going to buy on both sides. I want to buy. My stop loss is going to be 106.05. My target is going to be the other side of the Keltner channel, which is 109.12. All right, does everybody understand why we're buying? We're getting a close into the Keltner channel in a high quality uptrend. We then use the grid formula. It's 49 pips wide. I want 10. Done. My job's now done. How cool is that? Pretty darn cool, huh? Yeah, pretty darn cool. So this one is done. Okay. So these two trades right here are my favorite Keltner channel trades. Right here. And I'm going to share these with you guys in a second. But these are my two favorite daily Keltner channel trades. These are swing trades. Now I'm going to show you one real quick. I'm going to show you an example of more of a longer term trade using a weekly Keltner channel. And I'm also going to share this with you. I'm going to let you guys pick one of these. Which one do you want me to go into? I'm going to share this with you so you guys will be able to share whatever one. So or do whatever. I'm going to do the pound Aussie. I'm going to do the pound Aussie. Okay. All right. And actually, pound Aussie is a good example because I have workspaces set up. Okay. So you see anything interesting? Well, let's go back here. How does this, I mean, Tyson, does this really work? Well, does everybody see why this was a high quality uptrend closed inside the Keltner channel? Bam. High quality uptrend inside the Keltner channel, bam. High quality downtrend inside the Keltner channel, bam. High quality inside the Keltner channel, bam. High quality inside the Keltner channel, bam. High quality inside the Keltner channel, bam. Are you guys seeing this? Anybody? How many pips is this? This is literally 1,200 pips there, 1,200 pips there, 600 pips there, 500 pips there, 700 pips there, 1,200 pips there, and that's it. You think you guys can make some money with this? I'm going to give it to you because this is my gift to you guys. Because you guys, but I want you guys to trade. I want you guys to trade this on the grid. I want you guys to be grid traders with this. I do. You guys will make some decent money trading this by itself, but I'm telling you, you'll make life-changing. You can make life-changing money trading this with the grid. All right. All right. So here's the deal. What do we got going on right now in the pound Aussie? We got a high-quality downtrend at a high price, right? So technically, right now, we don't have a trade set up until we close back into the Keltner channel, but type in a wire yes if you can clearly see the trade setting up right now. It's setting up. All right. So here's the deal. Here's what we're going to do. This one also, I'm going to break my rules a little bit because I don't want to put my stop. Here's the resistance level above the moving average. You think I really want to stop up there? Yeah, right. No way. So I'm going to place a stop on this above the first resistance level. That's where I'm going to place my stop. Technically, I'm going to wait for price to close into the Keltner channel, like right here. Because the reason why it's important to wait is because look at all this. If you didn't wait for a close inside the Keltner channel, and let's say you front run this, right? Well, you got it. Your original entry would have been right here. Uh-oh, drew down, drew down, drew down, drew down. You didn't close inside the Keltner channel until all the way right here. You cost yourself, yeah, you still would have, I guess you still would have made 450 pips, but you literally cost yourself 800 pips. Type in a wire yes if you understand that. Like, so it's very important to wait for a close back into the Keltner channel. Very important. So, because this trade was successful, but you cost yourself like 800 pips. Don't do that. So I'm just going to set this trade up as if we did already get a close, or let's say we do very soon get a close in the Keltner channel, just so you see what this looks like. All right. So my target would be 58. That's the low end of the Keltner channel. My stop would be above there. All right. I believe we're moving down. So now what do I do? Well, this is how I'm going to do it. I'm going to bring in a 4-hour. Gary Fickhart loves to use 4 hours when he's doing position trades or monthly targets, which I actually am becoming a very big fan of. And so I'm going to use a 4-hour also, and we're going to do the 4-hour grid trading formula. So I'm going to take on the pound Aussie, I'm going to take the high and the low, which is 1,300 pips, times 3, divided by 2, divided by 10, 195. So my grid needs to be 195 pips wide. 195 pips wide. And so now I will right click, I'll go matrix. I'm going to do 10 up and down, both sides, 195 pips wide. I'm going to sell. My stop loss is going to be 172.03. My target's going to be 158.58. Again, we're assuming we closed within the Keltner channel. Technically, we haven't yet, but I think you guys understand that this trade is setting up, but we do have to be patient with it first. 1, 2, 3, done. How sweet is that, guys? I don't know about you guys, but this saves me so much time, energy, effort. This increases my probability of success. This is just awesome. This is just awesome. You guys liking this? Okay, here's the deal. here's what I want you to do. We've got 32 remaining spots we added 50 people who are going to be able to get the grids for life. I have talked the executives into adding one more thing. Now, there is a slight difference with this, but I have talked the executives adding one more thing. We are now going to do, if you decide to go into the grid trading class, there is going to be a 30-day ironclad money-back guarantee. I'm going to go through the details here in about, probably about 5 minutes, but here's what I want you to do. I have 32 spots. That's it. I have 330 people in this room. If you're not a part of this grid, all I want you to do is type in your phone number with the word me right now. You have nothing to lose. I mean this, nothing. And what I'm going to do in about 5 minutes, I'm going to go over one more example. In 5 minutes, what I'm going to do is I'm going to go over all the details, and then I'm going to share these workspaces with you. I'm going to share my Keltner channel, daily Keltner channel, and my weekly Keltner channel workspaces with you. But I'm only going to do that because I assume you guys are going to take my advice and trade either targets, leveling, mastermind, or this Keltner channel strategy with the grid, because it will be maximized trading it with the grid. Not to say you can't trade it without the grid, but I would like people to trade it with the grid. That's what I would like. That's what I would like. So what I want you guys to do, very simple. If you're not a part of the grid yet, if you've thought about it, if you haven't done it yet, I'm going to go through the details here in a second. I want you to jump in front of the line, though. We have 32 students that are going to get this for life. After the 32 are gone, I do have to say this. When the 32 are gone, the idea is that it's going to go to a subscription model. So not only will you end up paying more, not only will you won't have the lifetime or you won't have the satisfaction guarantee, but you'll also have the grid only for like 6 months, and then it's going to go to a subscription model. But if you're one of the next 32, and these are the last 32, you're going to never have to pay a subscription fee for the grid ever again. Ever again. To what I've given you guys tonight and what I'm going to put in your hands tonight with the Keltner channel strategy in the combination with the grid is enough to set you up for a strategy that should make you a lot of money forever. And I'm not even joking when I say this. This is one of the core strategies I used when I first started becoming very successful as a trader right here. So if you haven't gotten it yet, very simply, type in your phone number with the word me. I will go through the details in about 5 minutes, okay? So just simply type in your phone number with the word me. We'll reach out to you. We'll tell you all the details, but I will also go through the details. And I don't want you to think money. I don't want money to get in the way. I don't want any of that to get in the way. Just know that we'll work with you. We'll work with you with financing. We'll work with all this. And really, you have nothing to lose by going into this, by giving this a shot, because you have 30 days to test drive it. And if in 30 days you don't like it, for whatever reason, I'm not sure why you wouldn't like it, but whatever. If you don't like it, get your money back. It's very simple. It's very, very simple. So again, I'll give you guys another opportunity to type your numbers in, but for now, I would have every person, I can't stress this enough, every person to type in their number. And my gift to you is going to be this Keltner channel strategy. That's going to be my gift to you. So, and I'm happy to do that. I'm happy to do that. Jerry, hey, Jerry, just go ahead and type your phone number in, Jerry, and we'll have Charles reach out to you. But I want to make sure if you guys type in, hey, have my education specialist reach out to you, So I would rather you type in your number so we have it on record. So if there's any discrepancies on who gets the bonuses, who doesn't get the bonuses, who gets the lifetime, who gets the satisfaction guarantees, I just want to make sure it's clear on all ends. So even if you're like thinking about it, I would still type your number in. That would just be me, just as an example. Okay, so we went through 3 examples. We went through the Aussie New Zealand, the Euro Aussie. These are more swing trades, and then this Pound Aussie is more of a position trade. This Pound Aussie is more of a position trade. I wish I could go through more, but guys, those are the only ones that meet the requirements. There's no other trades. Literally using the Keltner channel strategy, there's no other, on the daily, there's no other dailies that meet the requirements. Using the weekly, there's no other weeklies other than there's a couple other pound pairs. But I do want to show you, I want to show you how, if you want to be a short-term trader, how you can use this. Because this, I believe for some of you, will be very sexy also. And yes, I just used the word sexy. Okay. All right. In this 1 hour chart, now I am not this type of trader. I don't trade short term. I'm not a scalper, but if I were, this is how I would do it. Okay. I want to show you this real quick. If you are looking at this chart and this is the 1 hour A, B higher, which direction do we have to feel, or do we have to think that the market is moving in? Not feel. Which way do we have to believe the market is moving in? Up, right? Because A, B, C, D, right? And so it's clear to me that the market should be moving higher. We had a fairly low price, relatively low, in an up A, B. So we're looking for a D extension up to this level, and we're going to be wrong if price breaks below this level. Okay? We'll be right up here, wrong down here. So that is about, give or take, about 118 pips away. So if I were a short-term trader and I traded the grid, watch this. I would go to a 10-minute chart. I'd pull in a 500 candle 10-minute chart based off of the 1 hour analysis that I just did. Now I'm going to copy my stop level over to this chart, and I'm going to copy my target level over to this chart. So now I've got my target and I've got my stop. And then I would pull in and I'd do the same formula that I did on the other ones. And I'd go from high to low, and I'd say 140 pips. Yep, 21 period Keltner channel on both. Absolutely, yes. And I'm going to share that. Oh, hey, real quick, guys, I forgot to tell you. I love that Cliff asked this question. No, it's not 21 on both. It's 200 period on both. So I've got a 200 period daily moving average, or moving average, weekly and daily, 200 period, because that's respected and that's basically a general. The Keltner channel, on the other hand, on the weekly, is not a 21 period. It's a 13 period. Now, the question that should go through your mind is, Tyson, why 13 periods? It's not because I just, think 13 period is a cool number. It's because 13 weeks represents 1/4 of price action, and 13 is also a Fibonacci number. Again, I want you guys to, if you trade indicators, make sure the indicators have logic based on the time frame you're looking at. Type in a wire yes if that makes sense. That's a very big pet peeve of mine. It's like a huge pet peeve of mine. Huge. Anyway, I'll share that with you in a second. Okay, 13 weeks equals a quarter of a year. Yeah, 52 weeks in a year, 1/4 of price action. It's not exactly a quarter. It's not like, it's not like January, February, March, but it's a quarter of price action within 1 year time frame. So, all right. So we know we need to be buying. We got a 140 pip range on the euro dollar. This is for a short-term trade. Now, this is not my style, but I just wanted to show you this 140 pip range. So what we do is let's do the formula. Right? We've got 140 times 3 divided by 2 divided by 10. So I need a 21 pip. I'm just going to say a 20 pip grid. I'm going to buy. I want all sides. My stop is at 106.83, and my target is at 108.36. Done. There it is. There it is, guys. If you're a short-term trader, you just set your trades up for probably within the next 24 hours to sit there and grid trade all the way up to that target that we think we're going to. Pretty cool, huh? Pretty darn cool. Yowar, that's a great question. Listen, I wish I could, I know you reached out to me on Facebook. Type in your number because we're doing the satisfaction guarantee, and I know you're kind of thinking about it, but I'm sure your education specialist or Jeff or one of the education counselors can answer that question for you. I believe so, but I can't tell you for sure, but I believe it does have to be. Okay. So what I'm going to do is this. I am going to, here's what I'm going to do for you. I am going to share these workspaces with everybody in this room. I'm going to assume that I am sharing these with you because you are going to utilize this as a part of, potentially a part of your grid trading experience. I am doing it because of the great reaction we've got to the grid trading already, and the my assumption that all of you understand that it's a no-brainer if we're going to give you guys a risk-free opportunity to get this. It's a no-brainer to try this out for 30 days. And if you love it, great. If you don't, then get your money back. So that's why I'm going to do it. Is that fair? And so my gift to you is going to be this strategy. I'm going to give this. I'm going to give this to you. Now, here's the one thing I got to say. I'm going to give this to you until I go to bed tonight. But I'm going to show you a way for you to keep it forever. All right, so here we go. All right, so now I'm going to upload this. I'm going to call this Daily Moving Average Celt. And I'm going to call this Weekly Moving Average Celt. And here's how this is going to work. Now I'm going to share this and I'm going to go through all the details. If you have not typed in your number yet, all I ask is just to have a conversation with your education specialist. I highly recommend, I really, really think all of you will be better off with this strategy. But here's what I'm going to do. I'm going to upload this workspace right now. Bam. All of you guys now have the Daily Moving Average Celt. I'm now going to upload this workspace. Bam. Now all of you guys have the weekly. Now how do you get it forever? Because I'm going to delete this workspace because those that aren't in this webinar, well, you guys are going to get, I'm going to award you guys because you know what, you're here and you guys are super dedicated. So that's awesome. So when I go to bed tonight, here's what I'm going to do. I'm going to click on this and I'm going to click on this and I'm going to hit delete. I'm going to delete these two. So what you need to do before I go to bed, I'd say what you need to do within the next 2.5 hours is open these workspaces up. After you open them up, go to this little tab here, save workspaces, and save the workspace to your computer. Once you save the workspace to your computer, it's yours. You have it forever. Type in a Y or yes if that makes sense. But I'm just going to give you fair warning. I am going to delete these workspaces because I don't want the world to have them. I don't want everybody to have them. It's my gift to you guys for your commitment of being here, and it's my gift to you guys, well, because I want you guys to take me up on this risk-free opportunity with the grid. I want you guys. I'm hoping you guys will take me up on this opportunity. How you open them is you go Workspace, Open Expert Workspace. Scroll down. And you can find my name and then click on Daily MA Celt, Weekly MA Celt, and hit open. And then once they open, they'll open like this. And when they open, you can't do anything to this workspace. See, you're like, oh man, what do? I can't do anything. And you won't be able to do anything. You won't be able to do anything, but you can go like this. So once you have it open, go up here, save workspace, save the computer, and save it. So now that I have it saved, watch this. Now I can close it, and you can do the same thing, and I can go here, open workspace, and now that workspace right here is saved in my computer. Cool, huh? It's a little that's a little end around. I don't know if it's a glitch. I don't know if it's meant to do that, but you know what? Hey, you're welcome. That's my gift to you guys. All right. So here's what I'm going to do. I'm going to go through the details. I want every person in here that is not a grid trader, I want you guys to please take this serious. All I ask is for you guys to give us 60 days, test drive this thing, and make this work. Now, there is a couple slight changes here, okay? There are 3 strategies Josh is going to teach you in this. There is a set and forget, no-brainer strategy where you don't even need to know direction. You just set up and you're good to go. On position, swing, and scalp. I'm not going to trade that style because I'm a professional trader. You get it's a 30-day money-back guarantee, which is really all you need. You know, for 30 days, you should be able to say, here's my thing to you. I believe that you should be able to, within 30 days, if you're thinking about doing this, right? Within 30 days, you should be able to answer yes to this question. Can you double your profits? I believe grid trading, just by taking the same exact trades that I would normally take, these are trades that I would normally take, but by grid trading them, instead of making, you know, however many pips, like this trade right here, if I was grid trading, or if I wasn't grid trading this, I would make, you know, 1,100 pips. But by grid trading it, I should make 2,200 or maybe even 34 or 3,500 pips. So within 30 days, you should be able to answer the question, can you double or triple, maybe even quadruple your profits? And I think the answer is going to be absolutely yes. I think you're going to be convinced of that. And all I'm asking is just for 30 days. And that's why I was willing to give you that strategy. So you're going to get the 4-hour class. There's a couple bonuses. Now, for you that have already signed up, you're gonna like this because, you know, hey, we told you, we warned you, but I'm gonna just show you something. Your expectations should be this. If you are a mastermind student, leveling student, or target trading student, you absolutely need to be in this. You need to be in this course. If you decide, if you want to utilize the strategy that I just showed you, then you absolutely need to have this. And I can't say that strong enough. So mastermind students, leveling students, target students, Keltner channel students that I just showed you, type in your numbers if you don't have this. You have to, it shouldn't be in a discussion. We're going to let you try this absolutely risk-free for 30 days. Now, here's your bonuses. Your shorter term target on the pound yen was 36.34. Yeah, I have let me just show you. 33.75. 33.75, Chris, is the trade that I'm in. That's where I'm trading it to. Okay, so here's your bonuses. If you type your number in, if you decide to go into this, we're going to get this in your hands risk-free. You're going to get 3 months of Josh and his 4-hour fill the gap strategies. Awesome. That's awesome, Chris. You get 4 hours for 3 months of Josh's 4 hours. It's once per month, and it's basically a session to make sure everything's good, make sure, you know, he sets up some trades with you, some scalps, some positions, some swings, and just to make sure you're rocking and rolling and everything's good. On top of that, here's the deal. We have 32 remaining spots. That's it. I thought I was going to get in trouble last night. I didn't. I came in. The executives decided to let 50 more students, or by the end of this week, we're done. But there's 32 remaining spots of people that are going to get this for the rest of their life. Now, let me explain this real fast. If you decide that you don't want to go into this, and then let's say in a month you decide, I think I'm going to go into it. Okay, that's awesome. That's great. But I want you to understand that maybe even next week, if you decide to go into it, you'll get it for probably 3 or 4 months into the grid trading course, Ray. If you decide to go into the grid trading course and get the grid trading strategy, if you decide to go into it in a week instead of now, right, then what you're going to get is you're going to get the grid and you're going to get the course, but you're only going to have access to the grid for anywhere from 3 months, 6 months, maybe upwards to 9 months. Maybe even upwards to 9 months. But then after your initial period, you're then going to have to pay a monthly maintenance or monthly subscription fee. I've been told that's where we're going. And I've been told after the 50, that's where we're going. So for the first 150 students, you will be guaranteed lifetime ownership, meaning you will never, ever, ever have to pay a monthly fee for this, ever. Once you pay for it, you got it forever. But that is for the next 32 students only. Now, when you type your phone number in with the word me or with the word bonus or whatever you want to type your phone number in, you're going to get access to our 30-day 100% money back guarantee. Now, this is 30 days after the course. You're going to have 30 days to test drive this thing. And if you're not satisfied with it, you get an ironclad money back guarantee. Now, we've told you that this was going to happen, and now it did happen. We launched 50 more seats, and we're still offering some really deep, amazing discounts. And now we're offering the 30-day money back satisfaction guarantee. The overall retail price is $54.85. The price, still early bird savings, still a big discount, is now $22.45. A savings of right around $3,000, but this is only, it's not 32, it's actually for the next 31 students. Now I can say this, I'm just going to say this, I'm probably not supposed to say it, but I'm going to say it anyway. If you have expressed interest in another webinar and you saw a different number than the number you see on your screen right now, let's say you did, then I am very much, and I mean this, I'm telling you, you have to type your phone number in. You have to talk to your education specialist like now. You have to reach out to them. And some of you know what I'm talking about. But here's what I want to end with, because I'm getting a little late here, but what I want to do is end with this. All I want you guys to do is understand that you're just giving us 30 days. That's it. You're giving us 30 days. And if in 30 days we can't convince you or show you that this should double, triple, maybe even quadruple your payments, your profitability, then get your money back. It's that simple. It really is that simple. I believe every grid trader, whatever trade you decide to place, whatever trade you're already in. Like, for example, I'll tell you my trades I'm in right now. Long the dollar yen, short the pound yen, I'm short the pound CAD, I'm short the pound New Zealand, I'm short the Aussie CAD, short the Euro CAD, short the Aussie New Zealand. Those are the trades I'm in right now. I'm sorry, long the Aussie New Zealand. Those are the trades I'm in right now. Every one of those trades needs to be traded on the grid, because if they're not, I'm going to leave money on the table. I should, for example, in the pound yen, I'm looking for 650 pips down. If I trade it with the grid, I should be able to make 1,500 pips, 2,000 pips trading it with the grid. And so if you're not convinced of that in 30 days, well, get your money back. And so I gave you guys that Keltner channel strategy. That's my gift to you guys. I'm glad. I'm happy to do that. All I ask for you, hopefully, you guys can put a little bit of faith in us for 30 days. Give us the 30-day kind of test drive on this. We offer financing. We offer scholarships. We offer all kinds of vouchers and ways to get you in this. I don't want the money to get in your way, because remember, if you do decide to go into it and you're like, oh, I don't know about the money. Well, you don't pay the money. It's not, yeah, you pay it, but you're really not out it until you say, yeah, I want it, or you get the money back. It's, so you're either going to have something that's amazing that gives you an amazing return on it, and you say, yes, it's worth it. You're going to prove it to yourself, or you get the money back. It's very simple. And so the bonus also, this is also beyond the cost, beyond the money back guarantee, the satisfaction guarantee. Beyond that, this is one of those things that I actually think, and Chris, I'm glad that your dad got it. That's awesome. That's good to hear, because this is one of those things, and I talk to Chris quite often, and that's why I called him out there. But I actually believe all the students, regardless of what strategy you have, if you know the direction we're moving in and where we're moving to, and the level that you're going to be wrong at, I believe every single trade you have on now and you're going to put on in the future needs to be done with the grid. Now, I'm going to end on this. How many pips, I'm going to ask everybody this. How many pips do you plan on making just in normal trading? In your normal trading, how many pips do you think you're going to make in the next 6 months? I'll give you my example, or in the next year. I made 27,000 pips last year. I'm up about 4,000 pips this year. It's a decent year. It was a good year last year. If I was trading with the grid, I would have been up close to 60,000 pips. If I had been trading with the grid so far this year, I'd be up 8,000 pips. So from my standpoint, that's like huge. That means if I make 30,000 pips this year, well, with the grid, I'm gonna make 60,000 pips. That's huge. That's huge. Okay? So here's what I want to do. I want you, if you have not yet, I encourage you, I challenge you to take my challenge. Take the 30-day challenge. Type in your phone number, talk with your education specialist, see what we can do for you. I want to get this in your hands. I want you guys to have the bonuses, not pay more for it, not have to pay the subscription fee for it. And especially if you're a target trader, mastermind trader, leveling trader, or if tonight, if you liked what you saw with the Keltner channels, that's great. That's good. I'm glad I could help you with that. Glad I can give that to you. It's a phenomenal grid trading strategy. I would absolutely say trade it with the grid, okay? All right, everybody, listen, I'm going to end here. I'm going to keep this open for a few more minutes. If you haven't yet, type your number in. Simply talk with your education specialist. You have nothing to lose and everything to gain. Give us 30 days. If you don't love it, get your money back. Very simple. My name is Tyson. Anthony, my name is Tyson. So, all right, guys, remember, I'm going to delete that workspace. Also, Helen, thanks. Lysandra, thanks. Michael, thanks. Gaston, thank you. Carl, thank you, I've got your number. Weston, thank you, I've got your number. Jeffrey, George, thank you, I've got your numbers. Remember, we only have 31 more seats. Also, one last thing, I am going to absolutely delete these workspaces when I go to bed tonight, so make sure if you like these, download them and save them to your workspace, okay? Fair? Fair enough? Okay, everybody. Hey, listen, thank you so much. I'll keep this open for a few more minutes. Helen, thank you. If you haven't yet, type your number in. Don't let me shut down without at least expressing some interest, all right? All right, everybody. Have a great night. We'll talk to you soon. Thanks. The workspaces are saved under, you go to Open Expert Workspace. So Workspace, Open Expert Workspace, and then scroll down under Expert Tyson Clayton. And you should see them right here. They should be, they're labeled Daily MA Kelt, Weekly MA Kelt. You got to open those up and then save them within the next 2 hours because they're going to be gone tomorrow. Okay? All right, thanks, everybody.